Welcome to Trade Finance Talks, a podcast from Trade Finance Global. During this series, we'll be hearing from global experts, as well as learning about the latest trends, technology and insights in the world of international trade and receivables finance. Episode 7.
I'm Dipesh Patel, editor at Trade Finance Global. With Islamic faith spanning nearly 2 billion adherents today, experts around the world tend to agree Islamic finance emphasizes the two main principles around risk sharing and ethical investment. As TFG prepares for the Islamic Finance News Conference IFM Asia in Kuala Lumpur this week, I'm delighted to be joined by Vineeta Tan, who is going to give us a brief overview of the market and key trends, as well as share what's in stock for the conference. Vineeta is the managing editor of IFM, the world's leading Islamic finance news provider, and IFM FinTech, the industry's first and only publication dedicated to FinTech for Islamic finance. Vineeta is a multimedia journalist with almost a decade of experience in the journalism and publishing industry, working independently and leading a team, specializing in Islamic finance and FinTech, covering regions including the Middle East, Asia, Africa, and Europe. So without further ado, here is Vineeta joining us from Kuala Lumpur, Malaysia. Hi Vineeta, thank you so much for having us on today's podcast.
Hi Dipesh, thank you so much for having me today.
So in 30 seconds, please give us your elevator pitch. Tell us a bit about yourself and Islamic finance news.
Sure. I've been a journalist for almost a decade now, and I currently cover the global Islamic finance industry, as well as Shariah FinTech sector for Islamic Finance News, which is a leading Islamic finance news provider. We are a multi-channel digital platform serving the global community with intelligence and news on this niche finance area.
Thanks, Vineeta. So in the last 12 months or so, we've seen ups and downs, external economic headwinds, a strong recovery of oil prices, and the US-China trade war in full effect. What are the big trends you've seen in the market, and how has this fared for the Islamic finance market?
Well, I think when it comes to market trends, it's important to remember that the Islamic finance industry, while it has its own unique peculiarities, if you may, does not operate in silo, outside the wider finance industry. So the events that you've mentioned, such as the US-China trade war, oil prices, among others, they do affect Islamic finance as well, depending on which jurisdictions, whether or not the state market is all exporting or importing and whatnot. But in general, analysts expect growth of the industry to moderate this year. So as a young industry, we've enjoyed the favor of robust double-digit growth for many years, which is a testament, I believe, to the demand for Sharia-compliant financial services, but also largely because we started from a very low base and any growth will be substantial, of course. But as the market matures and now with liquidity tightening, we see that around the world, the momentum is slowing down. So global Sukuk levels, for example, are expected to be lower, if not at par with our 2018 levels. Last year, almost $115 billion were raised through Sukuk or Islamic bonds, and S&P expects the offerings to slow down this year to about $105 billion to $115 billion. Whereas if you talk about trends specific to the Sharia market, I would definitely highlight the growing confluence of the ethical SRI ESG movement with Islamic finance. There's certainly a strong drive towards marrying the two in order to offer a more compelling solution to both consumers and investors. And another rising trend is, of course, the emergence of technology in delivering Sharia-compliant financial inclusion services and products to the underserved and underbanked.
Great, and we'll go back to the technology trends a little bit later on in this podcast. So going back to the basics, and for our listeners, please can you explain the difference between Islamic finance, Sukuk bond issuance, and takaful?
Of course. Islamic finance is basically, in a nutshell, it's financing according to Muslim principles. So meaning any banking and financing transaction have to comply with the Quran or the Hadith. So, meaning any transaction should not be involved in riba or interest. No excessive uncertainties, no gambling, not investing in anything haram, and of course, ensuring risk and profits are shared. So, within the Islamic finance industry umbrella, we have different sectors like capital markets, which is, of course, are largely represented by Sukuk or, Islamic bonds as the conventional finance industry would know it. We also have Islamic equity markets, then we have Islamic asset management fund sector, and then takaful insurance, which is basically Islamic insurance.
Thank you very much. This sounds very similar to green and socially responsible sustainable financing. Are there differences here?
Now, it does sound very similar, and it brings back to my earlier point about the convergence of SRI, ESG, and Islamic finance. So the industry is certainly aligning itself with the wider ethical finance movement because there are a lot of commonalities between the two streams of finance. Because after all, Islamic finance is about equity, it's about social justice, it's about investing in the real economy. But I would be careful not to reference them as one and the same because they are not. So simply put it, Islamic finance is a subset of ethical finance, just as green finance is also a subset of ethical finance. Now, a green finance deal may or may not be Shariah compliant, just as an Islamic deal may or may not necessarily be green, because obviously not all Islamic finance transactions are channeled towards sustainable energy development. But I would say that Islamic finance is all about financing for good. At the end of the day, you have to see what is it financing. What is it financing? So if it's for an environmental or sustainable energy project, then it could be a green Islamic finance deal. Similarly, if it's towards a sustainable development goal, then people call it Islamic SDG. It's all about marketing and branding it, but there's certainly a lot of common grounds. At the same time, they are not exactly the same.
Yes, understood. So what were the key accolades and achievements of the Islamic finance industry in the last year or so?
If I were to narrow it down, I would say the fact that the Islamic finance industry has finally put its money where its mouth is with the first green sovereign sukuk. Continuing discussion about SRI and green and Islamic finance. Now, for years, we've talked about how a green Islamic bond would make so much sense, not only for the Islamic finance sector, but for the general finance industry as well. So finally, last year, we saw the Indonesian government stepping up its game last year by finally becoming the first government in the world to issue a green bond that is also compliant to Islamic laws. And they did a second issue and second offering this year. We also welcomed the first SDG Sukuk by HSBC Amanah specifically. It was a Sukuk which raised funds towards the 7 sustainable development goals identified by the bank, which includes health, education, and climate change. I think these are incredibly encouraging, positive indicators, signaling the strong push towards finance for good, and also it shows or illustrates the instrumental role Shariah compliant financial instruments can play in the bigger narrative of sustainable finance.
Thank you. Within GCC, we also saw a lot of consolidation within the industry, most notably an array of mergers and acquisitions within Abu Dhabi, the UAE, and also Oman. What happened here?
Well, I think there are both internal and external pressures. First of all, of course, most of these consolidations, they make sense in terms of cost synergy, especially from an Islamic banking perspective, where generally Islamic banks are smaller in size and resources as compared to the conventional peers. It is also an increasingly competitive market, not only with many contenders in this space, with your Islamic banks and Islamic banking windows eyeing for the same market share, but also because economically the climate has been tough and unfavorable for financial institutions which have seen their margins squeezed. So by merging and consolidating their operations with peers, it gives Islamic banks more ammo, so to say, to grab a larger market share and also to serve their customers better. And we've seen this a lot over the last year, as we've rightly mentioned in the GCC. We've seen there are market mergers going on this part of the world as well, in Malaysia, and there are discussions going on in Indonesia and in Turkey as well.
Very interesting. Now let's take a deep dive into technology. What are the biggest fintech opportunities within the Islamic finance space? We've seen an explosion of tech in the space in the last 18 months or so, with billions invested in cryptocurrencies, asset management, and real estate. What have you seen?
We have definitely seen a lot more activities in the Islamic fintech space. Of course, not to the tunes of like billions of investments into crypto, but it's definitely a fast growing area. There is a growing number of digital tokens claiming to adhere to the Shariah, but Islamic cryptocurrencies remains quite a divisive issue among Sharia scholars. Some are doing it the right way, getting official like proclamation, validating the Sharia integrity of their digital assets. We are seeing regulators from key Islamic finance markets taking a more decisive stance about digital tokens. When you compare this to last year, this is a lot of progress, because at that time, a lot more regulators have adopted the wait and see approach. And then move on like 12 months later, we are seeing the likes of Bahrain, Malaysia, and Dubai issuing regulations about cryptocurrencies. And this also covers the Islamic finance space as well. Now, crowdfunding and peer-to-peer financing, as we see it, remains one of the most vibrant verticals in the context of Muslim finance or halal economy, not only in terms of regulations, but also the number of players emerging in this space, from Malaysia to the UK, the GCC, the US, Indonesia. There are a lot more activities in this space. Digital investment management services is another hot area. We've seen Islamic robo-advisors popping up not only in Malaysia, but also in the US and a few more in the making in Africa. We are also seeing a lot more entrepreneurs going into the Islamic digital banking space. And what is interesting is that in the context of Islamic fintech, a sizable chunk or many of these new startups or initiatives are coming from non-traditional Muslim markets like the UK or Europe or the US. Muslim populations are relatively scattered or fragmented, and demand is not significant enough to warrant like brick and mortar Islamic financial institutions. So what we've seen is that Muslim millennials are taking the opportunity or the advantage to use technology to meet this demand. We are also seeing the same trend in Africa, like in South Africa or Kenya, where technology is being used to reach the rural population.
Very interesting. So, if you had your eyes on one company within the IFN FinTech huddle, who are, in your opinion, the ones to watch this year?
So we've identified some 120 companies offering Sharia-compliant fintech products and services worldwide, and we're adding to this list as we continue to verify more startups operating in this space. One thing we have to note about the Islamic fintech area is that a lot of the startups are at early stage of development, maybe even Series A or B at most. And we are certainly not as quote unquote advanced as the conventional space with, a fintech unicorn popping up here and there. But we do recognize the strides that some of these startups have made, which are really impressive. And we do acknowledge their impact and efforts in the financial inclusion play at the World Islamic FinTech Awards, which was inaugurated last year. So we've actually identified 13 startups from around the world, startups to watch. In fact, we have a few of them presenting at the IFM Asian FinTech Huddle this week at the IFM Asia Forum. And this includes Wahid Invest, a robo-advisor from the US. We have a digital savings platform, Hello Go from Malaysia, and also Global Sadaqah, which is a digital platform that channels Islamic donations towards charitable causes in the region and worldwide.
Very interesting. So, standardization is regularly touted as a key driver for tech adoption and participation, as well as interoperability within many finance sectors. We see it frequently within the trade finance space. But for Sharia compliant finance, as well as for the Islamic finance industry as a whole, do you see standardization at the top of the agenda?
Oh, absolutely. In fact, standardization have been the top of the agenda for many, many, many years now. I know this is something that as an industry we struggle with, or it's a challenge, reaching that kind of Sharia harmonization, especially since there are different interpretation of Islamic finance across regions, right? But I would say last year there was a case that highlighted or drove the need for more standardization, the Dana gas case. I'm not sure if you're familiar with that. But with that case being, battled out during courts and stuff like that, we have seen Islamic financial institutions, we have seen global Shariah standard setting bodies, we've seen governments and regulators coming together and trying and putting this back at the forefront. Trying how else can we create more Sharia harmony cross-border, even within certain markets. And what is interesting or what is encouraging is that even last year, a few months ago, we've seen two major standard setting bodies, AOFI, which is one that governs the accounting standards for the global industry, and IFSB, or the Islamic Financial Services Board in Malaysia, coming together for the first time, signing an MOU, agreeing that, that we're going to sit down and we're going to see how both these bodies can come together and come up with a proper framework so that there's no overlay in terms of us trying to push the standardization agenda for the global industry. So for sure, this would be a top priority for the industry this year.
Very interesting. And we see exactly the same thing happening within just the vanilla trade finance space here in London. So moving on from that, what does 2019 look like for Islamic and Sharia finance?
What does 2019 look like for the Islamic finance industry? Well, I'm hopeful. For sure, there are, of course, a lot of uncertainties. You've mentioned the trade war. We are looking at increasing geopolitical uncertainties in the GCC, even here in Asia. There are some movements politically, and while all these are parts and parcel of operating in the finance market, we are remaining very hopeful. I think there are a lot of bright spots. ESG and SRI are certainly one of them. FinTech is an extremely exciting area for us. And we do think a lot of banks and also Islamic financial institutions are positioning themselves to be more digitally savvy, and they're really making that push in their digital strategy. We're seeing more interest in new emerging markets, especially in North Africa, in the African region, and also, interestingly, in several European markets. So these are optimistic signs. I think being in the Islamic finance industry, we try to be a bit more optimistic considering how niche the sector is. Recognizing also we do have challenges to overcome. Standardization is, of course, one of them. But I think in general, while we don't expect to reach the optimistic or robust double-digit growth numbers anymore, because we have, I believe, as an industry, we've also starting to mature, these are still encouraging numbers, and we are making great strides and progress. So I remain cautiously optimistic for this year.
Very interesting. Now, I think we are most excited about the 13 fintechs to watch at the IFM Forum, which is happening right now. What are you most excited about at the IFM Forum?
Most excited about the conversations and debates that we would have. So the IFM Forum is taking place over 2 days, and last year we welcomed 1,000 delegates. And always, it's interesting to see the kind of discussions that are held, not only on stage, and the kind of questions that we receive from the audience. And I think that reflects a lot about how far we've come as an industry. We're getting a lot more questions and interest from delegates, which is always a positive sign. And not only that, I think it's also the networking and meeting peers. Personally, for me, it's about meeting industry players, not only from Asia, because we have delegates coming in, as far as Europe, and the GCC coming in to obviously KL, Kuala Lumpur, which is the global hub for Islamic finance. So there are definitely a lot going on the next couple of days. We are expecting some interesting announcements, a couple of launches, in the Islamic FinTech space, also by a couple of the banks here as well. And certainly FinTech would be a large theme driving the conversations on stage this year. So I'm quite excited to see what players are doing, how banks are positioning themselves in the era of digital finance, and also how we can move forward with the discussion and effort in using Islamic financial instruments towards sustainable development goals.
Thanks, Vineeta. And I think your point on the sustainable development goals and addressing those are so important. And we've been in discussions about how the sector can really look to address the SDGs quite a lot in the last few weeks. So look, we're really excited about the IFM Forum, and I think you are too. But thank you very, very much for joining us on our podcast at Trade Finance Global here in Kuala Lumpur today. We're really looking forward to the next few days. Thank you very much, Vineeta.
Thank you, Dipesh. My pleasure.
Thanks for listening to Trade Finance Talks. Be sure to subscribe to our podcasts at tradefinanceglobal.com.